Enjoy. I'm Lexus Bell. And time for our drive time with insurance. Proudly brought to you by the GIA, the Ghana Insurance Association. Insurance companies' claims payment is our business, and today I'm taking you over to Donewell. Yes. We're going to Donewell Life Insurance Company Limited. I'm really glad to have head of technical here, Mr. Kodwo Kommson here. Honorable, you're welcome.
Thank you very much.
And how you doing?
I'm good.
You know what we say at Donewell, right? If it must be done, it must be done well.
That is the tagline for the general insurance.
Why the life there, you don't do it well?
No. We have a different life.
What's your tagline?
Our tagline is create your dreams.
Create your dreams.
Yes. Create your dreams. You have to create your
that's
dreams.
Nice. Okay. Yes. Well, today we're going to talk about the paid up policy. Is that it?
Yes, paid up.
And I'll share a bit of a preamble with you, a bit of a story, right? I received a call from a lady friend who seems confused with a policy that she has with one life insurance company. Now, her problem is that she signed on to a policy where the premiums were being deducted at source. That's from her employer. She later changed jobs, and at some point, she forgot she had a policy until she chanced upon the policy document given to her by her insurance company. Now, it was a 3-year investment-linked policy, and she had contributed 19 months before leaving her previous employer. Now, upon approaching the insurance company, she was told that she has two options: to continue to pay the premiums till it reaches the 36 months or wait till maturity. Now, she chose the latter, right? At maturity, she was told her policy is paid up, and so will get only her contributions for the 19 months with some interest and not the 36 months as agreed earlier. So, here are her questions to you as an expert in the area, Mr. Kommson. Okay. What is a paid up policy?
Okay, thank you very much. When we say a policy is paid up, what it means is that you stop paying your premiums for a period of time, and then at maturity or on death, the benefit, the sum assured, is paid back to the policy holder. So for life assurance, you have to pay your premiums monthly, quarterly, or annually, depending on the policy contract that you have. So if you sign on a policy and you are paying monthly, and in this scenario that you explained, you forget to pay your premiums for a number of time. First, the insurance company has to notify you. If they don't get you, then the policy will be made paid up. What it means is that premiums will not be paid till the maturity of the policy. So if it's a 10-year policy, and maybe you've contributed up to 7 years, and then after the 7th year, this scenario that you explained happened, then from the 8th to the 10th year, you will not pay any premiums. But when you come for your benefits on maturity, at the 10th year, a reduced sum assured is what is going to be paid to you.
Oh, okay. So, at what point in the life of the policy can we say it is a paid up policy?
For a policy to be made paid up, it is normally drawn in the contract. You'll be told that when you contribute X amount, let's say 5,000 on a policy with a sum assured of, let's say, 20,000, when you reach 5,000 and for some reason you cannot continue to pay your premiums, you can walk into the insurance company and tell them to make your policy paid up for you. Otherwise, to the insurance company detecting that you cannot pay your premiums, even though you've not come to them, will automatically make the policy paid up, so that at the term or the end of the period, you can come for a reduced sum assured.
Oh, okay. That's interesting. So,
yes.
What if this paid up thing is occasioned by, say, a job loss, or the fact that the premiums stopped being deducted without the person's knowledge?
Yes, as you explained in your scenario, when it's a job loss, first you approach the insurance company. If you don't know, still your premiums will stop. You stop paying your premiums for the duration that you are not, for the duration that you are not paying your premiums.
Yeah.
Up to the maturity. When you come at maturity, then the amount that will be determined by the insurer will be paid to you. However, if along the line you detected that you are not paying your premiums and you found out that, you have an opportunity now, you are working, you can go back to the insurance company for them to reinstate the policy that you have.
Okay.
In that case, you have to pay the arrears or the
the
premiums that you
premiums in
have
arrears.
missed.
Yeah.
Yes, the premiums in arrears. You have to pay that amount and then enjoy the full benefit of the cover. Otherwise, a reduced sum assured will be paid on
Will be
maturity.
paid on maturity. Oh,
Yes.
okay. I think it makes a lot of sense.
Yeah.
So how about if she had willingly decided to surrender the policy after a reasonable number of months contributions? Will she still get what she has contributed?
Yes, surrender is a different thing. It means you are no longer interested in the policy.
Mm-hmm.
When you surrender your policy, there are always penalties to pay.
Oh.
Because insurance is a contract term. You
Mhm.
signed on a contract for, let's say, 4 years, 5 years, 3 years. So you, in breaching the contract, you have to pay off some penalty. So it is very difficult for you to get the amount that you contributed to the fund.
Mm.
Normally, you get a reduced sum compared to whatever you contributed to the fund. So it's likely the lady will not get the amount contributed to the fund.
Okay, so would she have qualified for a paid-up policy if she had contributed less than 50% of what she's actually expected to have contributed within during the lifetime of the policy, especially since it's an investment-linked policy?
Okay, being an investment-linked policy, you'll be told the amount you have to reach before you get the paid-up status. Contributing 50% or less is very small, and it might not even qualify you for a surrender.
Oh, really?
Normally, yes, they will tell you the policy has to be in force for, let's say, 1 year or 2 years before you can even surrender. So when you come at that level and you are not at the amount determined by the company, that for you to have a paid-up policy, you have to have contributed about 1,500 or 1,000 cedis. So if you contribute any amount less than what has been stipulated by the policy, it will not qualify you for the amount. Anyway, it differs from company to company.
Yeah.
And then the policy you are holding. Some will state a lower amount, some will also state a reasonable
Okay.
high amount.
So,
that,
wait, if I'm just interested in the bit you said about the surrender, that sometimes, you know, if you've not even contributed up to a year, you don't even qualify for a surrender. But I still want to surrender, so what happens?
yes, you can surrender and go away with nothing if you want it that way. Or you continue the policy for the policy to attain a cash value for you to also get something out of your investments that you have put down.
Okay.
So when you want to surrender, the option is there for you, but the consequences or the penalty has to be paid.
Okay. Well, that's interesting. What advice would you have for people with similar challenges?
Okay, if you have a similar challenge like a paid-up policy, first, if you find out that you are not paying the premiums, approach your insurance company, explain the situation to them, that this is what I have. I've not been paying my premiums for this number of months. What do I do? It will be explained to you. You have to pay up your premiums, maybe the outstanding ones, plus possibly maybe a penalty because it's a contract and you are going against the contract. Some to let you pay just the premiums and then bring you back on board. So everything will be explained to you so that you do accordingly for you to enjoy the benefit that you've placed at the end of the contract. So that if you have, let's say, 50,000 and you have a project in mind and you have defaulted in the payments, you pay up so that at the end or term of the policy, you can have your 50,000 for the activity that you planned that you want to use that money for.
Okay. Well, that's a lot of education you've given us there. Thank you so much, Mr. Kommson. And I'm glad you also corrected me about Donewell Life Insurance.
Create your dreams.
Yeah, create your dreams, but you still have to do it well. It still has to be done well. But tell us a little bit about Donewell Life Insurance Company Limited.
Okay, Donewell Life Insurance Company Limited came about after the act that passed the insurance companies to be split. So in effective January 2008, we came on board and we've been operating since as a life business entity. We have policies that are geared towards the needs of our clients. We have one we call the individual term. For that one, you can determine the sum assured you want, and then we will determine the premium that you have to pay. So for instance, if you like this, you want 100,000 cover, You come on board. We look at your form, what you have filled, and then we determine the premium. Let's say you pay, 1,000 or 100 cedis every month. So upon death, it's a term policy. Upon death, we have to pay you the 100,000 to your beneficiaries or your dependents whom you have nominated.
Okay.
We also have the royal funeral. You know, in Ghana, we always believe in doing a dignified funeral for our loved ones.
Yeah.
Yes, so we have the royal funeral, which has other add-ons. We have a waiver of premium. What it means is that you, the premium payer, you sign on to other people, your dependents, your spouse, your parents, your siblings. You sign them on. If you take the waiver of premium, if you pass away first before them, all the premiums on the policy will be paid by the company on your behalf till the last person drops on the policy. Yes, we also have this 40 days cover that when you select, when the death passes upon 40 days after producing the necessary documents that we need to use to process the claim for you, we'll pay you the 40 days cover. There's 7 days, there's also 1 year memorial. And then we also have a cashback on it. After paying your premiums for some time, and maybe you are not enjoying anything back, then you think maybe you are just throwing money away. You can also opt for the cashback option. And then periodically, you can come for some percentage of the cashback for you to also know that you are benefiting from what you are paying.
Okay. Wow,
yes.
That's really cool. Guys, you need to speak to the team at Donewell Life Insurance Company Limited. I've been speaking to head of technical, Mr. Kodwo Kommson. Thank you so much.
I'm
glad
Alexis.
you came by today
Very
with your bodyguard. Wabo Papa.
Yes, I can see that.
Chama, what's the name again?
Isaac
Kwesi Danso. The voice also. Wow.
Yes.
Thank you so much. Okay. Thank you so much, Isaac, for coming by as well. To the team at Donewell Life Insurance Company Limited, thank you so much as well, and keep doing a good job in creating
your dreams.
amazing dreams. There
What
you
dream
go.
do you have for us to help you create like this?
We'll talk. Proudly brought to you by the Ghana Insurance Association. If you have any issues you'd want clarity on, please call the GIA Complaints Management and Advice Bureau on their toll-free number 0800 442,000, and the team will be willing to speak to you. Okay, stay tuned in. We'll talk more here on your superstation Joy 99.7 FM.